Good morning, degenerates, and welcome to another episode of Boring Crypto IO, the place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important, and I'm your host. Let's try to not get depressed. The news. SEC Gensler offered to serve as an advisor to Binance in 2019. Binance lawyers claim. I guess Binance lawyers have come out and said that there's documentation saying that Gary Gensler applied to be an advisor for Binance back in 2019 and got the big middle finger from Binance. And maybe that is part of why he is going after them so hardcore. Republican crypto bill, a 10x improvement on all others. We'll see what that means. And major Australian bank to decline certain payments to crypto exchanges. Guys, right now what you're seeing, and let's be completely honest, you're seeing an all-out traditional finance, world traditional finance attack on crypto. They're scared, guys. The reality is they're seeing control slip through their fingers. And not to be that crazy conspiracy theorist type of guy, or I can't even think of a word. But let's be real. Like, I know we're all in a lot of us are in here to crypto to make money, and trust me, so am I. But the reality is crypto is also a freedom to rule your own finances, right? To not have the system rigged against you from the legacy financial system, right? And if you've been here since 2017, they've looked at crypto as a joke, as a waste of time, as nerds on computers from as recently as 2017. And now they're seeing how real it is, and I think it's scaring them. So the legacy financial system right now is doing everything they can, because they can't just flat out ban crypto. They can't. It's impossible. But what they can do is stranglehold it, make it harder for people like you and me to basically get our hands on it. To, if we do get our hands on it, to exit. So harder to onboard, harder to offboard, taxes, regulation, etc., etc. Because how dare you as a peasant, a regular person, want to control your own finances, control your own life, control your own destiny, and not be a slave to the traditional financial system. And this is what you're seeing. The U.S. has come down significantly hard on it, and now you're seeing it happen in other parts of the world. Sorry for the rant per usual, but look, I am here to just give you the news, but I also want you to understand that this is a war. This is a war on your freedom as a person to be able to control your own financial life, your own financial destiny. And the people in control right now do not want you to be able to do that. Don't lie to yourself. That's not a conspiracy theory statement. That's just a reality. So, with that being said, let's go to the market, guys. Sorry to be super deep and heavy at the beginning of the video, but sometimes it happens. It calls for it. All right, current crypto market cap sitting at $1.03 trillion. We are down about 10 billion from yesterday. Bitcoin dominance sitting at 46.5%. ETH dominance at 20.1 still. And 20 Gwei will get you an ETH transaction. NFT buying time? Oh, 21 Gwei. Excuse me. Bitcoin was a small pullback yesterday. We're going to talk about it, per usual. Right now, kind of a red day across the board. Solana still getting its ass handed to it. A lot of people calling for Solana to be done. We shall see. Yeah, red. All the way across the board, guys. So, Bitcoin. We're on Bitcoin 4 hour. Nothing has really changed since I talked to you guys yesterday. I want you to focus on this. 1 touch, 2 touch, 3 touch. Bull trap, bear trap. This is our range still, guys. Nothing has changed. Until, we're going to say it this way, until we break and hold above this bull trap or break and hold below this bear trap, this 25-2 that everybody has been freaked out about, nothing has changed. This is what we're doing. So, what do we see here? Again, this is not financial advice. I'm not a financial advisor. To be completely honest, this isn't a trading channel, nor am I a good trader, so don't listen to me. I have no idea what I'm talking about. Hopefully, if you've been watching this, if you're trading, you're playing these swings and making some money. Again, right now, I am not openly trading. I am just building bags. That's what these green lines have been. These are all my buy orders. I've been completely transparent about it. Again, I got one at 25.816. I've got buy orders at 27.310 and buy orders at 28.610. This is, and all my bags have been filled, y'all. All my bags, and all within that range, right? That's what I've been doing. I've been just building bags. Look at this. Holy crap. I don't know. Like, this is a, so the indicator I have down here shows, it lets you know when there's bullish and bearish divergences, as opposed to seeing them yourself, right? This is a little crazy. I'm not this big one that just popped up. Anyway, yeah, guys, there's really not a lot going on. We 26.2 is basically some decent support. We've bounced off of it heavily 1, 2, 3 times. This is FUD stuff. This is Binance FUD that caused this. So I'm not tripping. I'm not worried about it at all. We lose 25 and then 24.3, which I recently talked about. We could be going down super low. But that's it, guys. That's what I got for Bitcoin. That's it. Not a lot going on. What's the news going on here? Yeah, there's not. All right, on the news, guys. I'll get you out of here. Major Australian bank to decline certain payments to crypto exchanges. Commonwealth Bank executive James Roberts cited a huge scale of investment scams involving crypto exchanges. Commonwealth Bank CBA, the largest bank in Australia, has said it will decline or temporarily hold certain payments to cryptocurrency exchanges, citing the risk of scammers. Listen to this. Temporary hold certain payments to cryptocurrency exchanges. So if you send your money to an exchange, we will decline it or hold on to it. How dare you send your money to something we don't approve of? The goal of all this bullshit is to control what you can and cannot spend your money on. If we let these people do this, we are done. Our rights as people, as humans, we're done. How, like, and I don't even get why people are even, like, the fact that no one's talking about this outside of crypto, like, no one's freaking out about this. You think they're not going to come after you eventually if you're not in crypto? You know, how dare you? You know, you fill up a tank of gas, right, at the beginning of the week, and then that's all you get for the week, because we don't think that you should put more than 1 tank of gas in your car a week, because that could potentially hurt the environment or whatever. That's what you get. You got your 1 fill up per week. We're going to shut down any payments you make or try to make at a gas station. Or you bought too much beef this week, too much cow. We're going to stop you from buying more cow. I'm going to tell you that you can't buy any more cow. You got your allotment for the week. That's all the cow you get. This is the goal, guys. This is the goal. Don't think that this is some sci-fi movie. They're starting to do it already. The fact that they can tell you what you can and cannot spend your money on, and you're not even going out and buying drugs or anything like that. You're not like buying, pounds of cocaine or something like that. You're trying to make an investment. You're trying to make your dollar go further, your money go further. So they're going to tell you you can't send money to a crypto exchange. It's crazy. This is how it starts. Sorry. I'm so sorry for rambling, guys, but I really want to drive this point home. The move comes amid two major global exchanges facing a lawsuit from the United States securities regulator, and is just a few weeks after another major Australian bank, Westpac, banned customers from transacting with crypto exchange Binance. Banning customers from sending their money to other places. That's all that really is. We're mad at the exchange, but we're going to hinder the client. And we're going to do it all under disguise of we're doing it to protect you. This is to protect you so you don't get scammed. Bullshit. This is to control you. And we don't want to lose your money. On June 8th, CBA said it would decline or put a 24-hour hold on quote-unquote certain payments cryptocurrency exchanges as a part of a quote-unquote new measures to help protect customers from scam risks associated with making certain payments to cryptocurrency exchanges. Fuck you. So much fuck you. Sorry, guys. I'm a goddamn adult. How are you protecting me by telling me I can't send my money wherever the fuck I want to send my money? Ugh. I feel for you guys over in Australia. I mean, it's coming to us too. But if you're not losing your mind over this, I would be terrified. Well, I already am terrified because it's starting in the United States. All right, the CBA spokesperson told Cointelegraph that for now, sorry guys, I got something in my eye. I'm trying to read this and I can't open my eye. Sorry. So sorry. Oh, we're so unprofessional over here. Let's start it over. A CBA spokesperson told Cointelegraph that for now, it was not providing further information publicly or to customers on what payment types it would block or hold, citing the risk of scammers circumventing the changes. Oh my God, this article is making my skin crawl. Well, we're not going to tell you which types of monetary movement we're going to block or put holds on. We're not going to tell you, but we're going to do it anyway. This is insane. This article is literally making me sick to my stomach. Reporting from Jessica Kassir Financial Review that Combank have banned AUD transfers, so Australian dollars, to quote-unquote high-risk crypto exchanges and limited transactions with others to $10,000 per month with a 24-hour delay. $700,000 per day leaves CBA as scammed money heading to crypto banks and the crypto industry. This is insane. This is bullshit. Everything under disguise of protecting you. In its statement, the bank added that a $10,000 Australian dollar, so 60 doesn't matter, $66.50 per month limit on customers sending funds to crypto exchanges to purchase cryptocurrencies would be introduced in the coming months. Mind you, you as a retail investor are only allowed to send $10,000 Australian to crypto exchanges. But don't forget what happened when a bunch of people got together on the internet and longed something that the traditional financial companies have been shorting forever in the traditional market. And because the traditional guys, the big wigs, the big swinging dicks, the big fund managers were losing money because a bunch of nerds on the internet were literally winning, they got the big exchanges to shut down transactions for them because they were losing. What am I talking about? I'm talking about the GameStop debacle. Guys, these people were losing so much money because a bunch of us, a bunch of nerds, a bunch of peasants rised up and basically played their own game against them. They've been shorting GameStop forever. They just knew it was they would always make money off of it because they continued shorting that stock to death. So they longed it. A bunch of people got together and saw what they were doing and did the exact same thing to them, but just in the opposite, and won and made a bunch of money. So what did they do? They called the exchanges and said, we have to stop this. We're losing money. And they shut the fucking exchange, the transactions down on that exchange. Robinhood. These people are 100% against you coming up. Insane. And now they're doing it in Australia to crypto. From today, CBA will decline or hold 24-hour certain payments on cryptocurrency exchanges in coming months. The bank will also introduce $10,000 limits in a calendar month where the bank can identify the customer payments or to exchanges for cryptocurrency purchases, it said. The general manager of CBA's fraud management services, James Roberts, claimed that scammers globally are capitalizing. Scammers are capitalizing on the interest of crypto, pretending to be legitimate investment opportunities and diverting funds into cryptocurrency exchanges. The bank said the measure would be subject to ongoing review and it would monitor the impact of the measures. It's a major about turn for the bank, which just over a year and a half ago in November of 2021 was set to launch crypto trading services for the millions of users of its CommBank app. The bank CEO Matt Coleman said at the time it sees risks in participating, but we see bigger risks in not participating, and added the sector and technology isn't going away anytime soon. No, it's definitely not. As recently as May of 2022, Coleman was wrangling with regulators over the launch of the product. The country's financial regulators, however, won out and a pilot for the crypto trading product was put on ice. I don't care how nice they try and make this sound, guys. This is complete control, in my opinion. Again, who the fuck am I, though? I'm just a random dude in a room making YouTube videos talking to himself. Moving on, guys. I'll do my best to get you out of here fast without rambling anymore. Republican crypto bill is a quote-unquote 10x improvement on all others. Speaking in a Twitter space hosted by Coinbase on June 7th, Ryan Selkis praised the new crypto bill for providing new firms with a clear path to compliance. Masari CEO Ryan Selkis has praised the newly proposed Republican crypto bill, commenting, "It is a 10x improvement on all the crypto bills introduced to the United States Congress so far. The Digital Asset Market Structure, DAMS, bill introduced on June 1st proposes to establish a framework to fill the gaps in the regulatory process between the U.S. Commodity Futures Trading Commission and the SEC Commission, the SEC, Securities Exchange Commission, I'm sorry guys, on activities related to crypto assets." Speaking at a Coinbase-hosted event on Twitter Spaces on June 7th, Selkis explained that U.S. Representatives Patrick McHenry and Glenn Thompson have drafted a pathway for tokens to each compliance through decentralization without instantly triggering securities laws. How could tokens in their earliest stage come into compliance with securities laws on a temporary basis unless and until they were sufficiently decentralized? Selkis asked rhetorically. He went on to acknowledge the former work of U.S. Securities and Exchange Commission Chair Hester Peirce, who raised a quote-unquote safe harbor proposal in February of 2020. A lot of the language that she said included in those proposals is now being worked out in legislative text. That's kind of made its way into the new bill. He added, I do think that it's probably a 10x improvement versus anything that we've seen so far. The last similar crypto bill to hit the floor of Congress was a Digital Commodities Consumer Protection Act, which was introduced on August 3rd to provide further supervision over the crypto industry following the collapse of FTX. The Masari CEO's comment were backed by, I'm not going to try and read that name, Tongwei Li, head of regulatory and policy at Bain Capital Crypto, who added that DAMS finally gives token issuers a path to compliance. We shall see. quote unquote, the issue that a lot of crypto issuers or token projects face is when you're launching a token, you don't become decentralized right away, right? Said Lee. There is a tweet from Lee talking about that. She explained that token issuers need time to work towards that, but while that's in the works, the SEC can swoop in and bring enforcement action against you. While Lee considered this to have always been the fundamental problem, she remains hopeful that dams can resolve it once and for all. I think this bill addresses that. It gives token issuers a path to get their blank in a really thoughtful way. It doesn't say what that word is, just says ... in parentheses. Anyway, Paul Grewal, the chief legal officer at Coinbase, also acknowledged the problems that many token issuers are tackling. Under the current law, there really is no reasonable pathway for those assets that start out life as a security to evolve and involve in large part by decentralizing in a way that's recognized under the law. The bill was discussed in light of the SEC's recent lawsuits filed against the two large cryptocurrency exchanges, Binance on June 5th and Coinbase on June 6th, for allegedly breaking securities laws by offering tokens as unregistered securities. The SEC now considers at least 67 cryptocurrencies to be classed as securities. And we know what those are. Among them, BNB, Solana, Cardano, Matic, Cosmos. We'll see. The dams bill going through. DAMS. Look into it. Last but not least, F this guy. SEC's Gensler offered to serve as an advisor to Binance in 2019, lawyers claim. This came out last night. Rumors that Gensler applied to be an advisor for Binance in 2019. Which was not long ago, mind you. Dude was suckling the teat and got told no, and now he's mad. Years before serving as head of the Securities and Exchange Commission, Gary Gensler offered up his advisory services to Binance, the exchange's lawyers allege. The United States Securities and Commission Chair Gary Gensler once offered to serve as an advisor to Binance. Lawyers representing the crypto exchange and its founder, Changpeng Zhao, have alleged. According to a June 7th CNBC report, documents filed by the SEC on June 7th indicated attorneys from Gibson & Dunn and Latham & Watkins alleged Gensler offered to serve as an advisor to the exchange in March of 2019. However, a brief report from the Wall Street Journal in March indicated that Binance had actually approached Gensler first in 2018 for the advisor role. We'll see. According to Wall Street Journal, which cited messages and documents from 2018 to 2020, Ella Zhang, who was then the head of Binance's venture investing arm, and Harry Zhao, co-founder of Binance invested firm Koi Trading, first met with Gensler in October 2018 to offer him an advisory position. Gensler later declined the offer. Additionally, the report claims multiple private companies approached Gensler to serve as an advisor while teaching at MIT, but he declined all offers. United States President Joe Biden nominated Gensler to the chair in the SEC in February of 2021, and he was sworn into office on April 17th of 2021. Prior to joining the SEC, he was a professor of the practice of global economics and management at the MIT Sloan School of Management. From 2017 to 2019, he served as chair of the Maryland Financial Consumer Protection Commission. We all know that it's just going on. Sorry, guys. I don't know how much. This is all kind of just going over stuff we've been talking about for all week. Basically, the rest of this article is basically talking about how CZ made a point that Binance never made donations to political parties, never did anything weird, large sponsorships, etc., etc. but they're getting sued, but the SEC never sued FTX. Something to think about. But guys, that's it, man. We'll see how this plays out. I don't remember if I told you yesterday, but supposedly CZ has said that they're willing to put aside $1 billion to fight this tooth and nail. We'll see how it goes. But outside of that, if you don't think that this is an all-out war against crypto, a worldwide war right now against crypto, I gotta say you're sadly mistaken. Oh, all right, let's look at Bitcoin one last time before I let you guys go. Nothing has changed. Cool. Got it. All right, guys, that's all I've got for you today. If you do enjoy the content that I provide for you every day on Boring Crypto IO, as well as my random rambling, please, by all means, subscribe to the channel. Turn on the bell for notification. Watch the videos, like the videos, and please share the videos on all your social channels. It'll help us grow. It'll help bring awareness to the space, which in turn will help your bags pump, to be completely honest. Yeah. That's it, guys. I'm out of here.